I'm going to explain MicroStrategy in 3 minutes. Let's dive into it. Has Michael Saylor discovered what has been coined as an infinite money glitch? His company, MicroStrategy, might just be redefining how Wall Street works and thinks. Here's how. In 2020, the business intelligence software company faced a common problem we all face. Inflation was eroding the value of the dollar. In their case, $500 million in cash reserves. Saylor, who was once skeptical of Bitcoin, took a deep dive into the crypto asset. In his conclusion, as with anyone who takes a deep dive on Bitcoin, Bitcoin is the best hedge against the declining value of the dollar. In August 2020, MicroStrategy made its first purchase of Bitcoin, 21,454 Bitcoin for $250 million, becoming the first publicly traded company to adopt Bitcoin as a primary treasury reserve asset. If we fast forward to today, MicroStrategy holds over 460,000 Bitcoin as of today, worth over $46 billion. No other company is even close. MicroStrategy has a tremendous first mover advantage. This brings up the question, how did MicroStrategy accomplish this? It's what Saylor calls the Bitcoin flywheel. The company gets money to purchase Bitcoin using three primary methods. One, borrowing money at near zero interest rates. Two, selling shares of MicroStrategy stock. And three, using profits from its software business while this isn't a major contribution. The goal is to increase its Bitcoin holdings and deliver returns to shareholders through what it calls a Bitcoin yield. Now, it may sound like a pyramid scheme, but the key difference is the collateral, the underlying collateral, which is Bitcoin. Bitcoin price appreciation fuels the stock price, which increases demand for debt and equity, which allows MicroStrategy to raise more money to buy Bitcoin, and so on. Hence the flywheel. The secret ingredient to all of this is what is known as the convertible note. These are bonds with an embedded option to convert to stock. The bonds are less risky than the stock because investors can wait until they mature and receive the principal if MicroStrategy doesn't perform. While many of them aren't doing this, but this means they get Bitcoin exposure with significantly reduced downside risk. The high volatility of the stock makes the conversion option valuable, meaning MicroStrategy can issue these bonds at extremely low interest rates, near zero. Now, Michael Saylor is using an analogy, just like Standard Oil refines crude oil into valuable products, MicroStrategy refines Bitcoin into financial instruments like convertible bonds and high volatility stock. They're essentially a Bitcoin refinery, and investors are paying a premium for the intelligent financial engineering and enhanced returns. But we shouldn't be negligible of the risks. MicroStrategy's success depends on Bitcoin's price. In a deep bear market drawdown, they could face serious challenges servicing their debts, potentially. Is Michael Saylor a genius? Time will tell. One thing is for sure, this infinite money glitch is a story that will be studied in finance for decades to come. To learn more about Bitcoin, you can visit simplemining.io. Thanks.